is Nur Amalina binti Ahmad. My ID number is PDA 1905173. Start with accounting policies. Definition. Accounting policies are the internal policies set by the entity to process, measure, recognize, record as well as disclose the specific item or transaction in its financial statement. Also, accounting policies might be different from one company to another. However, those policies are tailored to meet the specific international accounting standard or other standard bodies like local standard or regulation related to the purpose of financial reporting. Next, we have example for accounting policies, which is we have timing of recognition of asset, liability, expenses and income. We also have basis of measurement of non-current assets such as historical costs, and also we have accrual basis of preparation of financial statement. Next is how does the company apply the accounting policies for the Kosan Rubber Industry Berhad and also Supermax Corporation Berhad. For the Kosan Rubber Industry Berhad, we choose recognition and measurement, which is item of property, plant and equipment are measured at cost less any accumulated depreciation and any accumulated impairment losses. Also, the gain or loss of disposal of an item of property, plant and equipment is determined by comparing the proceed from disposal with the carrying amount of PPE and is recognized net within other income and other expenses, respectively, in profit and loss. For Supermax Corporation Berhad, we also choose recognition and measurement. So the policy for the recognition and measurement of impairment losses is an impairment losses in respect of goodwill is not reversed. In respect of other assets, impairment losses recognized in prior period are assessed at the end of each reporting period for any indication that the loss that decrease or no longer exists. An impairment loss is reversed if there has been a change in the estimate used to determine the recover amount since the last impairment loss was recognized. Also, costs include expenditure that is directly attributed to the acquisition of the asset. When the significant part of an item of PPE have different useful life, they an account for as separate them of property, plants and equipment.
Assalamualaikum. My name is Ain Nur Alia binti Muhammad Yusof from JIA 6B. So I will explain about accounting estimate. Accounting estimate is an approximation of the amount to be debited or credited on items for which no precise means of measurements are available. They are used in financial statements to determine the carrying amount of assets and liability and the associated income or expenses for the period where such amounts cannot be measured with precision and certainty. There are some examples such as account receivable, inventory, depreciation method and useful life, goodwill, contingent liabilities and others. How does the company apply? First one is depreciation method and useful life. For Kosan Rubber Industries Berhad, it uses straight line basis method for depreciation for item of property, plant and equipment. The estimated useful life for plant, property and equipments are plant and machinery 5 to 10 years, motor vehicle 5 years, factory furniture and equipment 10 years and others. Next, for Supermax Corporation Berhad, the cost of item property, plant and equipment, investment property and right of issue assets are depreciated on a straight line method or another systematic method that reflects the consumption of the economics benefits at the assets over its useful life. Estimated are applied in the selection of the depreciation method, useful life and residual values. Next is inventory. For Kosan Rubber Industries Berhad, the cost of inventory is calculated using the weighted average method. Net realizable value is the estimated selling price in the ordinary course of business, less the estimated cost of completion, and the estimated cost can make the sale. The second is Supermax Corporation Berhad. The cost of inventories is written down to their estimated realizable value when their costs may no longer be recovered, such as when the inventories are damaged or their selling price is being declined.
Next is accounting basis. The differences between cash basis and accrual basis, which is for the cash basis, recognize revenue when the cash has been received, but for accrual, recognize revenue when it's earned, which is we need to wait for the project complete. Next is recognize expenses when the cash has been spent for the cash basis, But for the accrual, recognize expenses when they are in a bill, which is we need to receive an invoice. Last but not least is the cash basis is taxes are not paid on money that hasn't been received yet. But for the accrual, taxes paid on money that you are still owing.
Hi, Assalamualaikum. My name is Syarifah Safariah from class DIA 6B. My ID is PDA 1905165. So, next is Introduction to Malaysia Financial Reporting Standard, which is MFRS 101. So, MFRS 101 is those structured to satisfy the needs of consumers who are unable to request that an agency to prepare reports customized to their unique information requirement. It is also defined as the general standards for financial statement reporting as well as framework specification and content minimum requirements. So, how the company complied with MFRS 101? There are a few items under MFRS 101 which is Statement of Financial Position. The declaration of financial position would contain line items presenting the following numbers, which is land, plant and machinery, investment property, intangible assets, financial assets, cash and cash equivalents, and investment for using the equity process. The total of asset classified as held for sale and asset included in disposal groups classified as held for sales in occurrence. The second item is Statement of Changes in Equity, a declaration of equity improvement that must be presented by a company. The declaration of changes in equity indicates the year's total comprehensive income, as well as the total amount credited to the owners and non-controlling interests for each portion of equity, as well as the effects of retrospective application or retrospective restatement in compliance with MFRS 108. So the third item is Statement of Comprehensive Income. The statement of profit or loss and other comprehensive income must display total other comprehensive income for the year, which is the amount of profit or loss. Next, the fourth item is Statement of Cash Flow. Users of financial statement will determine an entity ability to produce cash and cash equivalents as well as its need to use such as cash flow. Using the Statement of Cash Flow, in MFRS 107 specific how cash flow information should be presented and disclosed. And the last item for MFRS 101 is Notes to the Account. The details about the basis preparation of the financial statement and the relevant accounting policies is presented in the notes to the account. The notes must be also reveal information required by MFRS that is not included anywhere in the financial statement, but it is critical to understanding all of them.
Hi, Assalamualaikum. My name is Erra Umairah binti Hashim. My ID number is PDA 1905151. I am from DIA 6B. I'm going to explain about MFRS 102, which is inventories. First, I will explain to you guys what is inventories. Inventories is asset to held for sales in the ordinary course in business. Inventories also are in the process of production for such. Sales are in form of material or suppliers to be consumed in the production process or in the rendering of services. Okay, next we are going to the measurement. Inventory shall be measured at the lower of cost and the net realizable. The cost of inventory shall comprise all costs of purchase, cost of conversion, and other costs incurred in bringing the inventories to their present location and condition. Next, I am going to explain disclosure. The financial statement should be disclosed the total carrying amount of inventories and carrying amount of classifications appropriate to the enterprise. The last one is recognition and expenses. When inventory are sold, the current amount of those inventories should be recognized as expenses in the period which the related revenue is recognized. You can see here, they have two companies, which is Kosan Rubber Industry Berhad and Supermax Corporation Berhad. For Kosan Rubber Industry Berhad and Supermax Corporation Berhad, the cost of inventory is determined under the weighted average cost formula. The second one, for the Kosan Rubber Industry Berhad, inventory are measured at the lower of cost and the net realizable. Cost comprises the original cost at purchase plus the cost of bringing the inventories to their intended location and condition. For the Supermax Corporation Berhad, inventory are measured at the lower of cost and the net realizable. The last one, by during the financial year, inventories of goods recognized as cost of goods sold amounted to 1,024,840,503 for Supermax Corporation Berhad, while for the Kosan Rubber Industry Berhad is 321,5250. So that's all from me. Thank you.
Assalamualaikum. My name is Hanis Syakilah binti Najamuddin, PDA 1905157.
Next, I will present about MFRS 116, which is Property, Plant and Equipment. So, for introduction, property, plant and equipment are tangible items that are held for being used in production or supply of goods or services for being rent by somebody else. It is also for administration and that are expected to be used more than one period. The residual value of an asset is an estimate of the amount that an entity has at this time will derive from the disposal of the asset, having been deducted estimated disposal cost if the asset is aged and the conditions are expected at the end of useful life. For measurement, the cost of an item of property, plant and equipment consists of its purchase price, including important duties and non-refundable purchase tax after deducting trade discounts and rebates. Any cost that directly attributable to bringing the asset to the location and the condition required in order to operate at the way management intend. For disclosure, the financial statement should disclose for each of classification of property, plant and equipment when the gross carrying amount and the accumulated depreciation at the beginning and end of the period. So, for Kosan Rubber Industry Berhad, the cost includes expenses that are directly attributable to the acquisition of asset, and such are the costs incurred directly to bring the asset to a functional condition for the purpose of its use, and the cost of dismantling and disposing of items and restoring the sites where they are located. At the end of the accounting period, the amount of property, plant and equipment is 54,829,000. And for Supermax Corporation Berhad, after recognition as an asset, property, plant and equipment are carried at cost less accumulated depreciation and any accumulated impairment, loss except freehold land, factory buildings under construction, and plant, machinery and equipment in installation. At the end of accounting period, the amount of property, plant and equipment is 895,555,155 ringgit. That's all from us. Thank you.